NIO stock has been in a roller coaster for the last 5 to 6 months when it got to $61.95 per share on January this year and went all the way down to $33, an almost 50% drop in months until May that started bouncing back again, and it is trading today at $46.7 per share. Hello everyone, welcome back to the channel. Today we are going to talk about NIO stock, everything that has happened around the company in the last month, and what our analyst expectations are my expectations with this company. If you're new to my channel, please consider subscribing and smashing that like button since it really helps the channel out with the algorithm. Also, I have a completely free Discord group chat, which info that is down in the description below. We all know that NIO has been a big player in the EV space, and even though they almost went bankrupt last year, they were struggling financially and were bailed out last year by the government. They have actually been able to rise perfectly since then, and now many people are talking about NIO stock getting to $300 per share because of their excellent performance and fast growth. Today, NIO is one of the largest electric vehicle companies, one of the largest automotive companies in terms of market cap, with a market cap of almost $77 billion. Now, what has happened with NIO recently? First of all, they announced their Q1 earnings, which I am sure many of you already know that they reported delivery numbers of 20,060 vehicles for Q1, which obviously is huge growth of over 422%. But remember that during Q1, it was then when they were almost bankrupt, so it is actually incredible to see how fast they have recovered and grown in the past year. They reported total vehicles sales of $1.1 billion in Q1, which is almost a 500% growth year over year and an increase of 20% quarter over quarter. Their vehicle margin has been improving constantly in the previous year. As you can see, they were actually in the negatives for Q1 2020, but for Q4 2020, their vehicle margin was 17%, and Q1 2021 already 21.2%, which is a huge improvement year over year and quarter over quarter. So total revenue after all their other services, they reported $7.9 billion and a net loss of $199 million, which improved massively year over year and quarter over quarter. Surprisingly, obviously, this is actually incredible because it means that they find the way to improve even more. They could be profitable by the end of 2022, even though analysts are expecting them to have a growth of 109% for this year and 62.50% for 2022, and still not be profitable, but almost there with earnings or loss per share of 0.8 cents. So even though they did excellent and achieve a delivery record, the CEO said that overall demand for their product continues to be quite strong, but the supply chain is still facing a significant challenge due to the semiconductor shortage. In light of the strong momentum under a volatile macro environment, we expect to deliver 21,000 to 22,000 vehicles in the second quarter of 2021. Which, as many of you may know, one of the problems that they have been facing is that Renesas, which is a key supplier of automotive chips, had some issues at the beginning of the year as its factory caught fire, which delayed many deliveries, affecting companies like NIO. But they have already confirmed that they are back to 88% of production and that they expect to restore full production capacity at a key semiconductor factory by the end of June, which means that NIO got affected by this for the whole second quarter, and that is why their expectations for delivery were really low. But let's see how they have done. On April, they reported total deliveries of 7,102 vehicles, which it was still a growth of 125.1%, and on May the deliveries decreased, which many did not like because they delivered 6,711 vehicles for May, which means that they have delivered a total of 13,800 vehicles, and they're still missing 7,200 vehicles. If you ask me, I do think that they are able to deliver those numbers if the chip manufacturer was able to provide more during this past month, but we will know more about that in about a week or two. But apparently the CEO said on a conference that they have already over 10,000 deliveries, which means that they will more than achieve their goal for quarter two. They do have a nice balance sheet with almost $8 billion in current assets and 9.3 billion in total assets, and only 2.6 billion in current liabilities and 4.6 billion in total liabilities. Actually, they have excellent ratios here, which impresses me a lot because a year ago they were struggling financially, and a year later they have a healthy balance sheet even though they are a growth company. I do have to say that one of the benefits NIO has that maybe Tesla don't is the Chinese government. China will obviously favor a local producer over Tesla, which is their biggest competitor, or any other non-Chinese company within the industry, because they have been trying to become the leaders in the EV space. And even though Tesla is way bigger at the moment, they also have XPeng and Li Auto. Yet Tesla is the dominant, but what I want to say with this is that the Chinese government will support NIO over any other, as it is a Chinese company and it is very, very advanced in the industry as well. I'm saying this because I know that there are many concerns with investing in Chinese companies and their government regulations. I know that there is also a struggle with being a Chinese company and possibly being delisted from the stock market if they don't follow the US accounting rules and all that, but at least we can be a little bit more relaxed, as I don't think that the Chinese government will do something to harm NIO, as it is one of the biggest companies in China and actually benefits the government, just like it happens with Alibaba. Now, something very, very exciting right now is their NIO Industrial Park, which is under construction already with over 1 million vehicle production capacity per year. The Chinese government is investing in the construction of a huge industrial park called NIO Park in Hefei. An industrial cluster for intelligent electric vehicles will be created there, where hundreds of EV related companies will be located. Even though the government is the one investing in this, NIO is a major partner in the venture and plan to set up automobile manufacturing facility there, which will be awesome because apparently every key supplier will have their own facility within the park as well, which could help NIO decrease the cost per vehicle and be able to possibly achieve profitability faster. Also, NIO doubles production outsourcing with Jack. NIO outsources their vehicle production with Jack Motors, and with recent international expansion plans, NIO now wants twice as many cars from Jack per year. So instead of 120,000, they want 240,000, as they are starting to go international and want to be able to meet the demand that electric vehicles like NIO's may have. Something is that analysts or investors see or analyze NIO just like they do with Tesla: delivery numbers, production, and growth expectations. But these two companies have many other things involved that help with their growth. For NIO might be their battery swapping, for example, which they have it as a subscription service, and it is good because it is a recurring revenue for the company, guaranteeing a revenue for NIO. This benefits the user, as they have a brand new battery every time they charge their car, which means that their battery might last longer than a Tesla, for example. But this is only huge for the company if many people use this instead of charging their car. Now, obviously, there are some differences between NIO and Tesla, as Tesla is the leader at the moment in everything that they do: solar panels, AI, autonomous driving, and many people sometimes overlook NIO as a car company only, but they also have the battery swapping and many other patterns that they come out with in the future. Obviously, Tesla has an advantage in energy storage, delivery numbers, market share, and diversification, but NIO is practically starting to grow right now and could start other kind of businesses too. Just that this is complete speculation for NIO at the moment. Now, As a long-term investor, we have to understand that NIO is a very young company in comparison to others, and we have to expect a volatility in the stock that might actually present excellent opportunity or excellent buying opportunities for good long-term return. We do have to be careful with the threats of delisting Chinese companies if they do not follow the US accounting rules. But I do see NIO doing some excellent things in the future as they have been able to recover and expand even more as a company. Obviously, they have some competition such as XPeng and Li Auto, but they are way ahead of their competitors. I do think that NIO will grow more and more with years as they expand worldwide as Tesla is doing. I think that they could be the second Tesla in the world as the market is giant and there's more than enough room for both companies, and even more as within the next 10 years, a lot of countries are already prohibiting new sales of gas vehicles. In my opinion, the EV industry is a little bit overvalued at the moment, but in the long term, it might be an excellent investment right now. Now, could NIO actually get to $300 per share? That would be a return of over 539%, which for that, the company should be worth $413 billion or so, as today it is worth $76 billion. So basically, Tesla last year. If you ask me, yes, NIO could get to $300, but not this year nor next year. So I would not invest in NIO expecting that kind of return this year, but as always, we never know what will happen in the market. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps the channel out. Thank you and see you next time.